Hey everybody, this is Danelle, and today we are going to talk about what is a bear market. So we recently reached bear market territory with the S&P 500 earlier this week on Monday, June 13th, when the market closed at over 20% decline from its most recent high. The S&P 500 is a stock market index tracking the performance of 500 large companies listed on the stock exchange. It is also considered the benchmark index that many others look to when it comes to not only understanding the overall market and what's happening with securities market in the United States. Global markets also look and refer to the S&P 500, but also investment funds usually try to use the S&P 500 as a benchmark as to grading how well they're doing in their investment performances. Let's go to Investopedia to get a definition of what is a bear market. And a bear market is when a market experiences prolonged price declines. It typically describes a condition in which securities prices fall 20% or more from recent highs amid widespread pessimism and negative investor sentiment. Bear markets are often associated with declines in an overall market or index like the S&P 500. But individual securities or commodities can also be considered to be in a bear market if they experience a decline of 20% or more over a sustained period of time, typically 2 months or more. Bear markets also may accompany general economic downturns, such as a recession. Recession has also been a very hot topic, given that we are now in a higher inflation market. The CPI just recently came out last week showing that we have 8.6% inflation. And that goes to show that when you see the higher prices in the grocery stores, when you see the higher prices at the gas station, it's actually more than 8% in many different areas around the country. But overall, the average is 8.6 inflation that the government has told us that inflation number is. So they're trying to now take that inflation number down. So the Federal Reserve is going to be rising interest rates. Now, in reality, rising interest rates for, say, mortgages is not necessarily going to help us with regards to paying any less at the grocery store or paying any less at the gas station. So it'll be interesting to see what actually happens as these interest rates continue to go up. We just had an announcement yesterday from the Federal Reserve Chairman, Jerome Powell, saying that they're going to raise it 75 basis points, which basically means 0.75%. So just in one day, I believe the mortgages, the average mortgage rate is now up above 5%. I believe it's around 5.8% interest rate. So we're all being affected. We're all seeing the effects of inflation. And now the S&P 500 has reached the bear market territory. We look here at the 1 day, it declined 3.25%. And over the past year, year to date, the high was around 4,700, almost 4,800. And we're now down to 3,666.77. So that is over 20%. So we are now officially in bear market territory, and we are likely to see further decline. So if you want to look at it as a long-term investor, this is a great opportunity to start looking and strategizing as to how you want to enter the market. But it's important that we have our savings. It's important that we budget. It's important that we have an allocation that we can use towards investing. If we're not able to do that at the moment, it's okay. There's no rush. It's important to make sure that you have what you need to take care of your needs. Everyone's situation is different, but if you do choose to invest and you're able to invest, now would be a great time to start considering getting into the market. Not financial advice. It's very important that you do your own research, but millionaires and billionaires are made during economic downturns, during recessions. So if we're fortunate enough to be able to have a few dollars, whether it's $5, $10 a week, to put into the market by dollar cost averaging, please refer to our dollar cost average video, then it's a great time to start doing that, given that the market is down so much. We believe that the S&P 500 will come back to those levels. We don't know how long it will take, but history shows us that it always bounces back at some point in time. It may take some time, but it does bounce back. If you look here at the heat map, basically everything is red. The S&P 500 is broken down into 11 sectors, as you can see here, from technology, financial, healthcare, communication services, consumer cyclical, consumer defensive, energy, real estate, industrials, utilities, basic materials. We see red in every single category. Now, we are also seeing a huge downturn in cryptocurrencies. If we look at the top cryptocurrencies, we have Bitcoin and Ethereum. Bitcoin barely holding on to that $20,000 level. It's more of a psychological level. The next level of resistance, I believe, is around 1700, maybe around 1900, but I believe the next one after that would be around 1700. And Ethereum also teetering on that psychological level of 1000, many predicting that it's going to go below 1000 and Bitcoin will also go below 20,000. Time will tell. But as you can see, major dips in cryptocurrency, nearly 10% for Bitcoin, over 13% for Ethereum. So this is a time that if you are interested in getting into cryptocurrency, you see what it's done over the 7 days. Just for these top two cryptocurrencies, some other currencies are much worse. If you see, Binance Coin, look at Cardano, XRP, Solana. I mean, everything is getting beaten down. Dogecoin, which was very popular for a period of time, everything is getting beaten down very badly. But there's a saying that was very popular by Warren Buffett: when there's blood on the streets, that's when you want to get greedy. That's not the exact words, I'm paraphrasing, but basically, when you see a lot of red, this is when you want to be excited about getting into the market, because you can then hopefully ride your way when it goes back up. But you have to make sure that you choose good quality investments that has a likelihood of bouncing back over the long term. I believe that Bitcoin is one of those cryptocurrencies that will do that over the long term. So I am personally buying a little bit here and there when I can. Same thing with Ethereum. I'm dollar cost averaging into Ethereum every week, putting in a few dollars. And whether it's up or down, hopefully my average cost over time will be lower as Ethereum bounces back. Hopefully in the next year, 2 years, 3 years, however long it takes, we believe Ethereum is going to be here for a while. And the same for Bitcoin. And before we end this video, we would be remiss to not discuss what's happening and why there's a possibility that the crypto market could potentially go down lower. One of those reasons is consumer concerns regarding exchanges like Celsius. Celsius is a cryptocurrency exchange. It was a provider of loans for people who usually would take out crypto loans at certain at lower interest rates, and you could also stake your cryptocurrency with Celsius, and you would get a interest rate back. So due to the extreme market conditions, they announced earlier this week that they are pausing withdrawals, swapping, and transfers between accounts. So one of the main reasons why crypto became so popular is because Bitcoin was considered a new decentralized cryptocurrency, meaning that there's no central authority that has any authority over the value of your crypto. So using exchanges like Celsius or Coinbase, or even brokerages like Robinhood and Webull that are now selling cryptocurrencies, they're still a central authority. They still hold your crypto if you choose to leave it on their platform. The only way that you have true reign over your cryptocurrency is if you have what we call a cold wallet, where you have the private keys, and we've talked about that in our MetaMask video. Please feel free to refer to that. If you have the private keys, then they're your coins. Not your keys, not your coins. So that's a term that we also hear frequently in the cryptocurrency space. It's nice to have options like a Celsius, like a BlockFi, to be able to stake a little bit of our cryptocurrencies to earn a nice yield, but is it worth it? Many people, like myself, are learning that lesson that it's not always worth it. So we have to make sure that we're very careful with whom we trust our funds with. We've talked about in previous videos, if you leave your money in a bank, which many of us have, a traditional bank, you're insured up to $250,000. So even if you have more than that, then you have to, make sure that you have further insurance to help if something were to happen, if some calamity occurred where you could potentially lose your money in a traditional bank. But with cryptocurrencies, we don't have the FDIC, which is the, federal regulated agency that insures those funds. So since we don't have that in cryptocurrency, it's even more risky. So we just have to make sure that we are very considerate and thoughtful when we're making decisions with regards to our cryptocurrency, as well as just our money in general when we're investing. So we are in a bear market. We could potentially go much lower. So please be safe out there. We look forward to connecting with you very soon. Welcome to the chain. Let's stay linked. Please hit the subscribe if you like the content. We look forward to providing more information as we go. We look forward to seeing you next time. In the meantime, take care. Bye-bye.